Good morning everyone and welcome to today's trading sprint Xero 101 presented by myself, Neil Graham, MD here at Accounting Inc. So today we will be going through the fundamentals of Xero. We will be looking at our sales, our expenses, reconciling those transactions and looking at the basic reports within Xero. Okay, so we are in the demo company data here, and we are at the landing page within Xero known as the dashboard. So when you log in for the first time, you'll come into a page like this. Now, with this being a demo company and having demo data, we've got some pre-populated widgets here. So I will run you through these. We have our business bank account. So within Xero, we always connect to our online banking, and that will feed in our statement transactions directly into the software. So more about that later on. We have a widget here for cash in and out, and you can highlight over the certain months and it'll show you the ins and outs, and you can click through and it'll show you a breakdown of those individual transactions within that month. We can monitor some key accounts and their balances within the month or the financial year to date. And we have our customer invoices owed to you. So this is the balance that is due for payment from our customers. These invoices are overdue, and again we can click on when those invoices became overdue and bring them up. And exactly the same principle applies here on the bills side of things for our suppliers. Okay, so we can navigate around Xero from this blue bar at the top, and the one section that businesses are most going to be interested in is the business section here, and particularly these two sections here. So we've got our customer invoices, quotes and sales overview, supplier bills, purchases and orders, and purchases overview. So first of all, we're going to start with our customer invoices. Okay. So you can see here we've got different tabs. Now all means all our historic customer invoices that we have on the system. We can, if we've got some draft invoices, they'll be saved in this tab here. These are invoices that are awaiting payment from our customers, and we've got a record of what's been paid here. Okay, and finally we can set up repeating invoices for those recurring invoices that may go to perhaps a customer every month or week. Okay, so to raise a new invoice, we would just generally click on new invoice here, and this will take us through to our invoicing template. Okay, so if I start typing A, it'll bring up our contacts within Xero. So what's probably happened is that we've previously raised an invoice to ABC Furniture. So let's pretend we're going to do so today again. The date is 18th April. Let's give it a 30-day term. So if I click plus 30, or you can just select from the calendar here. Invoice sequencing automatically follows the next invoice. And you can give a reference there if you want. So let's just put consultancy. Now, quantity, we usually recommend 1 unless you are selling like the stock items. If you were selling 50 golf balls, for example, at £5 each, you could follow that principle. Or if you're just selling services, for example, it's you might just put 1 and it's £1,000. Let's just say consultancy for April. Okay, you can select your account from here. So this is the categories within Xero. So we are selecting sales. Tax rate, if you're VAT registered, we'll apply the correct VAT rate. And again, you can click from the drop down here. Now, you can see here it's calculating £1,000 as the total amount, or the gross amount. Now, I usually recommend that you change the setting to exclusive, and that will always be invoice amount plus VAT. So you can see here that £1,000 plus the VAT, 200 equals £1,200. Okay, so once you're happy with that, again, if you've got no VAT, you might just select no VAT. You can click approve, or you can add another, or you can save it as a draft. So we'll just click approve. Then if you want to go on and email that to your customer, click email. And because we've entered the details previously, or we might have added the contacts details within contacts, it's already bringing up their information. And you can set email templates as well, and that will change the default wording in here. So I usually recommend clicking these three boxes as well. So that will include a PDF attachment to the email that they received from Xero. It's going to mark the invoice as sent within the software, and it'll also send you a copy of the email and PDF attachment to your inbox within your email software. Okay, so if we just click send, and that's going to send the email to our customer. So we'll go back into our sales invoices overview. Here again, we've got metrics that we can track the top owing customers, awaiting payment overdue. Let's just go into see all again. And if we go into paid, we can view our paid invoices and awaiting payment. You can see the invoice that we've just raised and sent here. So you could add a due date in here if you like, so when you expect to get payment. So you can add some notes and things like that, and that's quite handy for credit control. If you get overdue invoices and the customer says they'll pay at a certain date, you can track that, and you can track that here. Okay, so that's pretty much how simple things are from the sales point of view. You can add a credit note to cancel out a previous invoice. You can send customer statements. Wouldn't worry too much about importing and exporting, and you can set up invoice reminders, which can act as automated credit control. So if invoices become overdue, Xero can send email reminders to your customer asking them to make payment. Okay, so let's go back into business and we'll look at the bills side of things. So again, much the same process. You click on new bill and you would complete the relevant fields. So exactly the same as what you did on the sales side of things. Now this is for manually entering bills within the software. If any of you have watched our Dext 101 training, using Dext does this manual data entry side of things for you. So it will complete these fields by extracting the data from your invoice or receipt, creating the bill within Xero. So it's saving you time doing manual data entry. So Dext is automation for business expenses. So let's just create an example here. We say we've got a supplier bill from BT, it's dated 18th of April, it's got a due date 14 days, telephone charges, it's £50, telephone, it's got VAT on it, might give it a BT 0420. Okay, so using Dext eliminates the need to manually type out this field. So you would normally put in your bills within Xero for those VAT registered businesses. If you've got you know, a micro business that's not VAT registered, you may, you know, just put your expenses on directly from the bank. So again, it all depends on the size and nature of your business. Okay. And you can see there, it just follows the same principle that we've entered our bill. Now, another benefit of putting your bills onto the system is that you've got this ledger here where you can track each and every individual bill, just like you can with the sales invoices. Whereas if you're entering transactions directly from the bank account, you don't have this record like what you do here under every customer or supplier, and won't be able to track individual income and outgoings. Okay, so once we've got our transactions into the software, we've got all our customer bills in and all our expenses, it's time to what we call reconcile the bank. So within the dashboard, you can see the first thing you're going to come across here is this blue reconcile button. And Xero wants you to keep your bank account fully reconciled and up to date. And if your bank account's reconciled up to date, you've got your customer invoices on, all your supplier bills are on, you're going to have pretty much accurate financial records that you can get some decent reports out of. Okay, so this is our business bank account, and you can see our statement balance is here. Now this should match our statement balance at our bank account, and this is the balance within Xero. Now I'll explain why these two are different shortly. And we've got this metric here that shows you the bank balance over time. So we had our balance went up in March and it's come down at the end of March and in April. So what you would normally do is you would click on the blue button and that would take us to our bank statement. Now on the left hand side here is our statement transactions. So just like you would see in your actual bank account, every line here is a different transaction. Spent is money going out and received is money incoming. So think expenses and sales here. And on the right hand side is where we want to effectively categorize every transaction within the software and assign it to a category and say what it relates to. You'll notice here that we've got some green boxes here. Now, Xero is pretty clever, and what is happening here is that we've received 618750 within our business bank account. And on the right hand side here, Xero is asking, does that amount received relate to a customer invoice that we have previously raised? So if we flick into invoices, We'll go to awaiting payment. You can see here is an invoice that we've put on the system to Ridgeway University, and our customer has paid us in the bank, and all we have to do is cross-check that. Are we happy that that amount received relates to that previously entered invoice, and click OK. Now it is exactly the same on the expense and outgoing side. So we have paid out 1181.25, and Xero is suggesting, okay, is that payment relating to that supplier bill that's on the system? And if we are happy, we just need to click OK. So Xero will read the amount, it will read any description and look at the date as well, and then it suggests, is that amount that's spent, that's going out as a cost relate to that bill that's on the system, and we just have to click OK. So I usually recommend best practice is to go through and get rid of the green ones first. So by work on a basis of process of elimination, and you can just go and match off the green ones. Yeah, we're happy with that. Then you should just be left with transactions that we need to reconcile by other means. Okay, so we've got rid of all the green transactions. Then what I usually recommend is going down one by one and reconcile them. Now you can see that we've got no OK box here. Now this is because we don't have a matching invoice on the system. Now some transactions, particularly spent transactions or outgoings, you won't always get a supplier bill for. Now think along the lines of bank charges, loan repayments, maybe insurance payments that you've got on direct debit, wages, director drawings, those type of things where a supplier isn't giving you a physical bill. So in this example, we've used the Create tab here. Now you can see we've got 4 little tabs along here, and the Create tab is where we can create the transaction directly from the bank account. Now this is what I was alluding to before when I was talking about our bills overview. Now when we do create transactions directly from the bank account, they won't appear in here because we've not actually entered the bill. It's just what we call a bank transaction. Okay, so let's say we've not got a supplier bill for this transaction here. We can just fill out these fields. So the who is the name of the supplier. The what is the accounts category that we want to assign it to. So let's say it's motor vehicles. So you can select the drop down or start typing and it'll bring up the transaction, and you might just put a description here, parking. Okay, so region, don't worry about that. That won't appear on most Xero licenses. That is what we call tracking categories, and you can see here we've got north, west coast, south. Now what that is trying to do is different what we call departments. So certain businesses might have multiple locations or departments. So think about perhaps Greg's Northumberland Street versus Greg's Quayside. So we might track that cost to the location that it relates to. And here's where you can apply a VAT rate. Now, I'll always recommend If VAT is involved, you need evidence of the VAT receipt or bill. So go and either create a bill, and you can attach the physical copy here. So you can upload directly from your computer and drag and drop the copy of the physical invoice or receipt. Or you're using something like Dext, which will extract the data directly from the receipt or invoice. So we really shouldn't be using or claiming VAT on transactions that come directly from the bank account, because a VAT transaction you should always have evidence of, and therefore your supplier would be giving you an invoice or receipt. So let's just say no VAT. So things like wages, loan repayments, they don't have VAT on. And once we're happy, you can see the little OK box has appeared, and we'll click OK. And you just work your way down. So in this transaction here, it might have VAT on, but you don't have the bill. Let's say your business partner has the receipt, and you need to go and chase him up and get him to either create the bill within the system or put it through Dext or auto entry or another business automation expense tool like that. Okay, so we've got another central parking there. I'm going to go to the start and show you a different transaction. Okay, so Smart Agency. So we've made a payment of £4,500. Now, a payment of that size, you would expect to have a supplier bill on the system. So you're probably wondering, well, why is that not going green? Okay, so if we click on Find and Match, we can search by name or amount. Now I'm just going to start typing Smart. And these are the two bills we have on the system. The Smart Agency. We've got £2,000 and a £2,500, which add them together equals the £4,500. So because we've got two bills that don't in one relate to £4,500, it's not turned green. So we need to go and find them and select both of them, and then it's going to turn green because it's calculated the two together and matched it to the £4,500 that's left the bank. Now, in a real life example, this might be that you are a plumber and you receive multiple invoices through the month from, let's say, Plum Store or Juicens. Then you get a statement at the end of the month with all your invoices on, then you pay the statement balance. So you might have 10 invoices on the system here, then pay the statement balance, and because you've got individual invoices, it's not matching, so you would repeat the process, select individual invoices, then select OK. Okay. So you can see here that these fields have been pre-populated. Now this will be because we've completed these fields in the past. So we might have done that in the previous month, and we've got a similar transaction come through, and it's used something called auto suggest, and it's pre-populated, and once we are happy we just need to click OK. So again, we've got more automation there, saving on manual data entry. We can set up bank rules. So these can be good for things like standing orders and direct debits. So think about loan repayments, finance payments, perhaps insurance, direct debits, those type of things, where you've got a certain amount going out of the bank every month, perhaps to the same supplier. So if you click here, you can click Create Bank Rule, and it'll populate these fields, and this is where you can set the certain parameters and create a rule. Now a rule's already been created for this transaction, You can see it here. And you can see that when the bank statement reads 11, it's going to apply these settings down here. It's going to give it that description. It's going to post it to that account. It's going to apply that VAT rate. And if you're happy, you just click Save. And again, once the rule's applied correctly, you can just click the OK button every month. Okay, so we've received £1,000 within our bank account. Now, this is a transfer from our savings account. So we can use this transfer tab here. Because we've got our savings account set up, we just need to press OK. That will mark it as a transfer and put the corresponding entry into our savings account also. And you just normally work your way through completing each statement transaction. Finally, we've got this discuss box. This is where we can leave a comment. So let's just say you're called Joe Blogs, JB, and you want to ask me, your accountant, so in this example, Joe Blogs isn't sure where to categorize this transaction. So he's asked me, and I've just responded here, allocate to professional fees. Now, Joe Blogs knows that if we get any further transactions from ACL conferences, that he needs to allocate them to professional fees. Then he can just go in and fill out the create tab and put it to professional fees. Be under legal, I think. Yeah. So normally we'd have legal and professional fees set up, then deal with that transaction. So you would just work your way through and deal with all the transactions until you fully reconcile your bank account. Okay, so once our bank account is fully reconciled, we can have a look at the reconciliation report. Let's have a look there. Okay. So at the 1st of April, our statement balance within Xero was 886059. Now again, that should match our statement balance within our bank account. But our balance within Xero was £10,084.50, and the difference is this transaction here. Okay, so we have not reconciled this bank statement transaction, so this is why the difference is. So once we reconcile this transaction, our statement balance and balance in Xero will align. So our balance in Xero will reduce by this amount and it will equal our statement balance. Okay, so let's have a look as of today. So you can see we've got these unreconciled statement transactions, and once they are reconciled, this will align our balance in Xero with our statement balance, and the two should match. Sometimes we get these little errors with imported statement balance and balance out, which are usually corrected the next day. So sometimes it can be some errors with the bank feed, which usually sorts itself out within one day. Okay, so if our bank account is fully reconciled, our balance in Xero and statement balance should balanced together. But the reason why is because we've not reconciled these transactions. Okay, so that's really the fundamentals of Xero, how we get our customer invoices and supplier bills raised within the system and how we reconcile them within the bank account, marking them as paid. So the next main thing for business owners will be the accounting section. So we can access our bank accounts here, and we can also access reports. Now you can see star here. These are reports that we've starred, marked as our favorite. And down here we've got modules of the software that we've also marked as favorites that we can access fairly easily. So let's have a look at reports. And you can see these reports here have been starred and will appear here. So I recommend the reports that you should be starring will be your balance sheet, profit and loss account. I always say change to age receivables detail and age payables detail, and perhaps your VAT return if you're a VAT registered business. Account transactions again can be useful, and that will bring up a ledger of all your business transactions within each and every individual account. So if you've got rent, it'll bring up all the transactions that have been categorized as rent. So let's have a look first of all at the profit and loss account. So the main report small businesses will use will be the profit and loss account. Now our financial year is from April to 31st of March. So let's have a look at last financial year. And this is our annual profit and loss report. So we've got our sales, cost of sales, which is our direct costs, gross profit, admin cost or business overheads, then down to the bottom our operating profit, or otherwise known as net profit here. So we can compare it to the previous year by clicking one, and you can see here. So in last financial year did a profit of just under 9,000 versus a loss of just under 9,000 in the previous year. And again, you can click on each and every individual balance, and that'll take you through to the transactions that make up that final balance. Okay, so you can set your time frames in here. So you can, let's have a look last month, and let's have a look, compare it with 3 previous periods. So this is our P&L for last month and the 3 prior months before that. You can also edit the layout down here. So perhaps you want to save this report and you might want to put the year-to-date figure in here. So this is more advanced accounting, but you can do so here. And you can also, let's see, track a percentage of turnover. So in this example, in March our purchases was 11% of our sales, whilst advertising was 58% of our sales. Let's have a look at the balance sheet. So the two main reports in accounting are the balance sheet and the profit and loss account. Profit and loss account tracks our income, expenses and profits, and the balance sheet our assets and liabilities, and our capital, which is our equity or shareholders funds, down the bottom. Now the balance sheet traditionally is a little bit harder for small businesses to understand, and it's called the balance sheet because within accounting and bookkeeping there's always two transactions. So let's say we raise a sales invoice for £100. It would go into the profit and loss account as a sale, and the other side would go into the bank account. Let's say, we raise the sales invoice £100, our customer pays us £100 cash, £100 goes in here, and £100 goes into the profit and loss account. Now the profit and loss account gets transferred into the balance sheet here at the bottom, so current year earnings fall under here. Let's have a look here. 8845, 8845, and this is where it balances. So we've got our £100 goes in there as a debit entry, and our £100 sale goes in the bottom as a credit entry. And you can see here that our capital and reserves figure equal our net assets, and this is where we're getting that balancing effect. Okay, so within the balance sheet we have our fixed assets, so these are things like equipment, think computer equipment, plant and machinery, some furniture, motor vehicles, those chunkier items that have a longer lifespan. Current assets are things like cash at the bank or cash in hand, money owed from customers, stock, and creditors, again, money owed to suppliers. Think HMRC. Short-term creditors can be loan repayments due within 1 year. Long-term creditors might be loan repayments due longer than 1 year. Okay. So your capital and reserves figure here at the bottom should be an indicator of the value of your balance sheet. So our balance sheet is only 23314. Now this means that we only have 23314 available for dividend distribution for limited companies, as dividends can only be paid from profits. So let's head back to reports, and let's think about age receivable detail. Now this is more of an accountant's report or financial controller's report to track what invoices your customer owes you. So here we have our customers, and we have the value of invoices that are awaiting payment. So this report can act as a snapshot to track what invoices are still due for payment. And we've got our different months here, so this will be the current month, less than 1 month, 1 month older, 2 months, 3 months and older. So if you've got someone doing credit control, they might run this report and then start phoning up these customers here to chase up these invoices. And again, you can click on each and individual one, and that'll bring up the detail behind every invoice. And the same applies to age payables detail here. Okay. So let's have a look at the VAT return. So if you're VAT registered and the VAT returns are set up within the software, it'll automatically pull up your returns and your return periods, so don't worry about completing this. So this is our VAT return, and you can see here for the period, let's say it's the quarter January to 31st of March, due to HMRC is 1779.37, and you can look up the individual transactions by box here and click through to pull up each and every individual invoice, or again track by the VAT rate applied. So we usually always recommend it if you've VAT registered, your accountant or bookkeeper reviews and submits your VAT returns for you, but this is how you can access the VAT module. Okay, so payroll, we usually recommend again your accountant or bookkeeper looks after payroll. Projects is an add-on, so it's an additional feature of Xero, so it doesn't come as part of standard Xero, but it can be bolted on to a Xero subscription, and that will allow you to track projects or jobs. And finally, we've got contacts here where you can keep a record of your customers or suppliers' details. And edit their information here. So you can add email addresses, phone numbers, that type of thing. And finally, a couple of things here. We can quickly add an invoice or a bill, or we can search within the software by clicking this button. In this little drop down here, we can click on our settings. And Xero files, this is where we can upload documents to the software. So you can upload PDF invoices or photos, images, that type of thing. And you also got this little Xero email address here that you can email documents to, and it will appear in here, and you can add folders and that type of thing. Okay, so that is the fundamentals of Xero, and just to recap, the first thing is to get your customer and supplier transactions within the software. Once they're up to date, go through and reconcile the bank, which will mark them as paid, and reconcile your bank transactions, and that should bring everything up to date. Then you have the ability to run financial reports, knowing that your books are up to date. So that concludes today's trading. If you have any further questions, please feel free to reach out to us. You can check out our website at www.accountantinc.co.uk or email us at hello@accountantinc.co.uk. So until next time, or if you have any further queries, please reach out to us, and we look forward to speaking to you in the future. So until the next training session, it's goodbye for now.